Hello, and welcome to our show today. We're going to be covering basic sales and service journal entries. My name is Mary Jane Collins, and I'll be your host. Let's start with a definition of what revenues are. Revenues are the cash or a promise of payment from customers generated from the sales of goods or services during the fiscal period. In the accrual system, revenues are recorded at the point in time where the services have been completed or the goods are handed over to the customer. Let's look at what a basic journal entry is. You have the date, which we place in months and days. You have the account title and description. You will always have at least one account debited, which is placed up against the line, and one account credited. Credited accounts are indented. The third line will be the description of the transaction, and then debit, meaning left, and credit, meaning right. And you will have one debit and one credit which equal each other in the amounts. They must be the same for it to balance. Alright, let's look at some various transactions both for services and sales in journal entries. We will start with cash sales of inventory to a customer. First, we will start with the date, which we will place in the date column, January 5th. Then we will look, we are receiving cash from this customer. That is an account title. So we will debit cash to increase our cash, and we will credit a revenue account. Since we sold goods, it's sales, so we will place sales indented as a credit, sales revenues. Our third line will be a description, cash sales of goods. Now we will look at the amount, $500, and we will debit cash because we are increasing the asset account cash. It increases on the debit side, so we will debit that account. And then we will credit sales revenues, which will increase the revenue account. Revenue accounts increase on the credit side, and therefore are record-keeping accounts where we keep a record of all the sales we do during the year. Now let's look at this transaction only on account, meaning credit. So credit sales of goods to a customer. We start with the date. We'll put that in the date column, same as before. But now, charged the cost to the customer's store account. The title of that account is Accounts Receivable. This is the money owed to you by customers. So we will debit accounts receivable. It's an asset account. And we sold, so we will be using sales revenues as our credit account, again indented. We will put the description, sold merchandise on account. It's for the same $500, so we will debit accounts receivable for the $500. That will increase the accounts receivable account because it's an asset account. And we will credit revenues by the same $500, and that will increase our revenue accounts. Now, let's look at the same one, but on credit. Okay, these are our service accounts. So, date's the same, and we're receiving cash from our customers. So we will debit cash, thereby increasing that account. It is services this time, so we will do service revenues indented. Our description will be services performed for cash. The amount, $500, will be debited to cash, which increases the asset account cash. It will be credited to service revenues, which will increase the revenue account service revenues by the $500. Now let's look at the same transaction using credit. Services provided to a customer on account. On account means that they're using credit or not paying the bill until later. So we'll start with the date. Again, place it in the date column, and then we will do charge the customer's service store account. So we will use accounts receivable, which is when customers owe us money, and then we'll charge the service account, which is service revenues for the amount we've earned. We will put a brief description, services performed on account, and then it's for the same $500. So we will increase the asset account, accounts receivable, by debiting it for $500, and we will increase the service revenues account by crediting it for $500. To the four types of journal entries to record either sales or services. Now, here's a link to some job aids or handouts that will help you. Number one is a list of common account titles placed in categories such as assets, liabilities, and stockholders' equity, revenues, and expenses. It will also tell you on which side the account increases, either on the debit or left side or on the credit right side. Also, examples of some basic journal entries. These are basic. You can't add every single account in the world, but they are the most basic ones. And here's a link to my website. If you're a C&M student, you can access it. At this time, due to security reasons, students that are not C&M students cannot access that account. I thank you for your interest and your time. Please feel free to review other videos on various topics in basic accounting.